All right, so in the last show that I did, I said we don't want to lose the 80K level, and that's exactly what ended up happening. We saw a big breakdown on the weekend. The worst case scenario really was losing this zone, and we swept the 74 to 75K region, which is a key level if you look at the weekly chart. So now in today's video, I want to break down exactly where the market sits, the moves that I've been making over the weekend, and how I'm thinking about my portfolio, and also why I'm actually cautiously optimistic this week. And I think if you're now just starting to get like ultra bearish and ultra despondent in this zone, why I think that's actually a mistake and how I think this could actually play out over the coming week or so. So if you do enjoy content like this, where I'm keeping you up to date every single day, make sure to smash the subscribe button and turn on the notification bell. Let me know if you're part of the Noti gang in the comments below. So firstly, we have to just do a bit of a post-mortem on the weekend. It was pretty crazy with total crypto liquidations above 5 billion over the 4 days from Friday to Monday, making it the largest wave of liquidation since October 10th. It was also technically bigger, the Saturday liquidations versus the FTX collapse and also Luna. So it was materially one of the biggest liquidation events we've seen in quite some time for crypto. I think the important thing to note is that this wasn't just in crypto specifically. It was, of course, across gold, which had a major pullback. I've actually been buying into this pullback just to solidify my positioning, although I think it is going to chill out for a little bit. This does, in my opinion, look like a multi-month top on gold. Obviously, silver also came down substantially. I know Fabian in the Discord has been adding some silver. Oil went down. Equities went down. I'm still monitoring the open. I'm literally recording this just before US Open. Equities are looking okay. They're set to open down, but the futures market is slightly better than people thought. That's why we're seeing a bit of relief across markets. But I really do want to see price action during US Open. So that's something I'll be monitoring. Unfortunately, it'll be after this video. So tomorrow I'll let you know what I think of the US session. But what happens in the US session is definitely going to be really, really important. It's one of the reasons we're seeing relief now. But of course, that can turn if there is, a spanner thrown into the works during the US session. So I'm watching that. And what was the reason for this de-risking across markets? Well, a lot of it was due to the new Fed chair, who we're actually going to speak about today. His name's Kevin Warsh. The reason the market's dropped is because he is known for his slightly more hawkish takes on policy, which is obviously good for a strengthening US dollar, which has been weak recently, but of course bad for risk assets, which usually work on the inverse correlation to the dollar. So there's been a lot of fears. Maybe we won't get the rate cuts that Trump wants. Maybe we won't get Fed balance sheet expansion like we've seen under Powell because he is more hawkish. I'm going to break down, I think, one of the big misconceptions about this later in the video, and it holds the key to why I'm cautiously optimistic right now in the market. But firstly, I want to go through some of the technicals on Bitcoin because I think it's very, very important to go through. So as we sit here, we have lost the 80K region. I do think there is a decent scenario that we are making a potential retest play of that level. And Paradise did a very good update in the Discord today. He basically said the H1 noodle has capped price for the rundown, so flipping it would be something to consider for a long. There is a little bit of a reversal scenario taking place at the moment. I'm personally not leveraged long right now, but I can see the setup for a potential move into 81K if the market opens decently. I do think for now the worst is over. I think we swept a very key level, which was the 75K level. This is the high of March 24. It was also one of the retests that we saw mid in 2025 in April, before that was during the tariff scare, before the big run up. This is quite a significant level, and we saw quite a lot of demand in that zone. If you want to go down to a more granular view of the markets and look at how we reacted, we wicked into this zone. We had a deviation below the wick low, and then we rebounded quite strongly, and now we're looking at a potential flip. We could reject here and come back down, but it's not my base case right now. I'll get into that later in the video. I think we do see a bit of relief in markets, and I think the reason why Bitcoin and Ethereum got hit so hard is because this happened on an illiquid weekend. So the moves are typically heightened during the weekends. They typically front run US Open, which I think will be down, but Bitcoin has largely priced that into the market because it's such a reflexive asset. Going to be interesting, by the way, to see what happens to Bitcoin when equities move into tokenized equities and 24/7 equities trading, whether that actually stops these illiquid weekend moves because it's just constant, but that's something that we're going going to have to see in the future. As Paradise says, he has alerts set for a run of the lows, so there is a potential that we come back down and sweep 74. Once again, going to depend on US Open, but this isn't my base case. More so looking at potentially a flip of this region to push back into the 80s. There also isn't a lot of volume. If you look at the VWAP in this zone, potentially could be a squeeze to the upside. So that is where my bias is leaning at the moment. Paradise is also in the Discord long Hype and Zek, so he got some nice entries on these, on the wick, as you can see on the noodle flips on the 1 day here, and then also tagging the lows on the cluster on Zek. So he's in a couple of trades. I always like to combine multiple analysts from the Mars High Club to see, if people are aligned, and I know that Surf XBT is also relatively aligned with Paradise. If you look at his chart, he's got the key level on the April lows, which we recently swept as a support zone, and he says that he is also aligning with Paradise. So he's targeting potentially a bounce this week and then looking at a potential short at the 200 EMA. I mean, given the fact that Bitcoin is technically in a downtrend, I guess any relief rally could be a shorting opportunity, but I feel like at some point that meta is going to shift. And I do feel like there are some players in the market that could potentially step in and support market if price actually holds up. And I'll talk about that theory slightly later in the video. Benjamin Cowan posted talking about his potential bull case for Bitcoin, which was a fractal playing out similar to Google and Nvidia, where you see your highs, your higher highs, then a sweep of the lows, basically a fake out, only for the market to grind higher, potentially into 2027. This is a setup. I think overall, from a long-term perspective, I'm still very bullish on Bitcoin. I do view ultimately lower prices as opportunities to accumulate. I just think you have to be very aware and very level-headed of the price action and market structure in the short term. And we'll get into what I'm doing with altcoins because I did make a few moves later in the video, but I think you really want to wait in this current market for momentum, and then that opens the door for potential long setups. Whereas, if you're in a downtrend like this, you are kind of fighting against things. If you're trying to trade longs, into short-term reversion, and then obviously we've just seen continuation to the downside. So it's been hard to hold, positions for a very long time in this market, especially longs, because you'll end up just seeing them, come into a zone and then end up making lower lows. That's in terms of, trading risk on versus risk off in the short term. From a big picture perspective, it is possible. There's been a lot of talk about 64, 65. I know Paradise highlighted that. I think Cowan has 70 to 72 on his chart, 75. This is all the zone, this entire zone from 65 to 75, which we bounced off, which is all support. I think long-term entries, anywhere in these zones, are going to look pretty good in a couple of years' time. I'm going to speak about, at the end of the video as well, the ISM. The new results are coming out today, and the correlation from Bitcoin to ISM, and why that could potentially be a trigger for Bitcoin once we do start to, increase the ratio on ISM above 50, which is taking its time, because although there has been debasement occurring, at the same time, the economy, the manufacturing economy, isn't actually as hot as you may think. A lot of it is just fluff in the markets and not actually being driven by underlying economic growth and policy, which typically, is an environment where Bitcoin thrives. So these are the setups now. I think all the analysts are aligned that if anything, we're looking for longs right now. We're not really looking for shorts at this current moment unless we had a push up and a reason to short. But obviously, US Open today is going to be something that I am definitely watching. Just wanted to touch on Ethereum as well, bouncing off quite a nice zone here. I do think ETH could make a push up because it was oversold versus Bitcoin. There was, more forced selling on ETH and some big whales that were getting liquidated. So I do think if there's mean reversion, ETH could actually front run that. And this is something that I'm also looking at. I probably do prefer the ETH long slightly, just due to the fact it isn't as advanced in terms of its move to Bitcoin, and it was smashed down more. You have a pretty clear inval as well at 2150. I'm not personally in these trades, by the way. I want to see what happens with US Open, and I'm not really trying to trade short-term scalp longs in this market. But I'm telling you guys this, A, because maybe you want to trade it and look at some of the setups, but also B, because I want to highlight that things aren't actually that bad. At least in the short term, I think we can see a bit of relief, and I do think in the short term the worst is over as well. You might also be wondering, well, what about that 81k level? Well, when you do flip a level, typically what happens is you come and retest that level. I guess we're going to have to see how we react. There is a chance this is deviation and we come back into this zone. There's also a chance, we reject off this zone and we sweep the low 70 to 74k. As I'll speak about later in the video, I'm not scared of that scenario, because I think the way you should be preparing your portfolio right now is with both scenarios scenarios in mind. I don't think any of us should be loaded up on a short-term bias at the moment. It's just far too risky. If you have a really aggressive short-term short bias, I think you can get blown out by mean reversion here. But if you have, a super aggressive long bias, you can also get blown out if markets actually perform worse during the session and we sweep the lows. I think all of your, plans around trading, around holding altcoins should all center around a slightly mid to long-term thesis. I think that's the best way to approach the market, and we'll talk about that. So let's get into it. Kevin Walsh was one of the big reasons that, the market sold off, but I just wanted to point out a lot of the narrative right now is basically that, he's critical of QE. He favors a tighter Fed balance sheet. He's going to come in. He's going to be really, really hawkish. I think this is an interesting point that I read on X. Take Him says here, my base case is Walsh cutting rates on AI productivity and cutting back the balance sheet. So basically what he's saying is that there's potential that, okay, maybe he's not going to have a very, expansive balance sheet like Powell, but maybe he'll offset that with further rate cuts, which actually supports what Trump wants. So that is quite interesting. Trump actually came out recently and said, I hope he lowers rates, called him so good. I hope he's going to lower rates. He has to do what he wants to do. And then I dug a bit further on this, and I found out that I mean, you can't always read too much into these things, but it is interesting that, the Walsh family has ties to the Trump family. So Walsh is married to Jane Lauder, the billionaire heiress to the SD Lauder fortune. Her father is Ronald Lauder, Trump's close college friend. So there's a link in the family there. Ronald is the president of the World Jewish Congress. So Heidi says here, they aren't picking a new chairman. They're keeping the money printer inside the circle. And I think this just alludes to a bigger point that I want to bring up of why would Trump be openly endorsing Kevin Walsh if he didn't have some sort of security or some sort of inkling that he's going to go along with the plan? And Trump has very clearly made the public plan the fact that he wants reduced rates. Obviously, he doesn't have full control over that, but he does somewhat have control, of course, over the Fed chair that he elects. And he wouldn't pick Kevin Walsh if he thought that it was going to be detrimental to his plans. So I do think and this is also why I added some gold over the weekend, even though, I think gold might stay suppressed for a little bit. And yes, we may see the dollar creep up. There is a chance that Walsh actually comes out, and obviously we need to wait for him to actually come in, and then the next FOMC for us to actually verify what his approach is. But you never know; he could come out in a speech, towards the end of the week, and then he might be questioned on this, and he might be slightly less hawkish. We really need to lean into his wording and see and kind of read between the lines to see, look, maybe he is going to come in a little bit softer than people would expect because of his affiliation to Trump. Of course, they are technically supposed to be an independent body, but we know how politics works, and I highly doubt Trump would put in someone that's going to be going against his plans, at least in the short term. I know he also elected Powell, and then their relationship kind of forked off towards the end, and then Trump went against Powell publicly, but in the beginning, they were more closely linked. So there's always a chance that he plays ball for 6 to 12 months until he establishes more authority, and then things actually shift towards the end of Trump's term. But I mean, we're talking about the next 6 to 12 months in markets here. We're not discussing the 3 to 4 year outlook, which becomes a lot murkier. So I think if anything, the fact that the market priced this guy into the market by obviously markets tanking, gold, Bitcoin, dollar rebounding, if anything, there could be a shock to the upside if people realize, well, maybe he's not as hawkish as you think. And I think there's some evidence, and also just reading between the lines, some logic to suggest that it's not really in his best interest or Trump's best interest for him to be super hawkish anyway. So I feel like it's a little bit of a nothing burger, to be completely honest with you, and that this dip is a little bit unsubstantiated. I think that it could be a bit deeper than just the Fed chair. I definitely think there was a huge derivatives wipeout in gold. I think there's a lot of in fact market manipulation happening on gold and silver right now. I feel like that played a part in it. It was also just ridiculously overbought. So naturally, you're seeing price come down again, reverting to the mean. But technically back to the October 25 highs. Equities as well. There's been a lot of AI bubble fears. Earnings are still grinding up, but there's fears around valuation. So I feel like there's more pressure on markets, and it just took a little catalyst to kind of expose how fragile things are. It does make me wonder if there's a bigger catalyst, what could happen to markets, because they are very reactionary right now in both directions. But that was the theme coming into the year. I said at the start of the year, it's going to be a hyper volatile year. So now I want to discuss just one thing on Bitcoin, and then I want to go through what I'm doing with altcoins and how to think about the market overall. One thing you got to be watching is ISM, because we know how linked Bitcoin is to the manufacturing index. And typically Bitcoin has bull runs when ISM is above 50, and ISM actually hasn't crossed 50 yet this cycle. I saw a tweet from Cowan saying that we might look towards this in 2027. So I think a lot of people are, quick to assume and have been, and even I use this in a data point in some of my videos, that we would get a reversal in ISM, and that would be a trigger for the Bitcoin price. But just keep in mind, we haven't actually got this reversal. Like, monetary policy and ISM are separate, although some of the policy has been supportive of markets. Bitcoin, one of the reasons Bitcoin hasn't moved is because the real drivers of Bitcoin, which is the business cycle, because of how intricately linked it is with liquidity, that hasn't ticked over into bullish territory, which is 50, which is considered expansive territory for ISM. So that is, we're set to see a release today. Consensus is that it'll be 48.5, because I actually think this takes months to play out. But towards the end of the year and 2027, that is a catalyst that I would be looking out for Bitcoin. I think if we are going to bottom, it's going to be in the next couple of months. I'm not calling a macro bottom here. The last time I called a bottom was definitely a local bottom, ended up going lower. You always have to reassess your bias, right, as the market evolves. So not going to be early to call a bottom. I think maybe locally for the next few days, I would say we are probabilistically leaning that way, but we can always trade lower over the next couple of months until we form like a true bottom, shake out all the weak hands, and then enter a reversal phase. But I want to talk about how to actually navigate that in terms of your portfolio. So I think this is a moment to have like a real talk with each other. I did this tweet which dived a little bit into this, but like, this market is hard. Like, there is absolutely no denying that this is one of the toughest markets. I mean, crypto and highly volatile markets are difficult anyway. Even in bullish periods, they're difficult. But obviously, when the market is put under pressure, they're even more difficult, especially when you're seeing like unprecedented liquidation events like we've been seeing. So, I mean, I've personally taken a decent hit since portfolio highs. I think I'm down like 35% off my liquid portfolio. And then, off my paper, maybe it's closer to 40 to 50% since the peak at the end of 2024. It's a little bit of an unfair comparison because I hit some crazy heights then, and it's unrealistic to assume that you're going to cash out 100% of your altcoin holdings. So naturally, there is going to be a bit of wiggle room. But at the same time, throughout 2025, I mean, in the past year alone, gold is up over 60%, silver's up over 100%, equities are also up 30 to 40%. So I guess the fact I'm down from highs, and not guess, in fact, I know the fact I'm down from highs, and equities, which and gold and metals and other indexes, which you can use as a benchmark, they've outperformed. I mean, it's pretty clear that I've underperformed. And I think a lot of you would be in a similar position where maybe you outperformed in 2024, but then 2025, you've actually underperformed. And clearly the start to this year, if you've been long crypto or long risk or even long metals, if you longed late, you'd also be underperforming. It is really difficult, but I'm going to talk about a few things now that I think are really important to help your mental reframing, because over the past 7 years now, it's crazy I've been in space for that long, since 2019, I've been through this a lot. I've been through 2021, where I got so euphoric, and then I actually made my way to $1 million, then I got completely wiped. I went all the way back down to, I think, 150 to 200K, over an 80% drawdown in my portfolio, which absolutely sucked. In 2022, I kind of got crushed again over this entire period on the Luna trade, and then I was holding UST, and it was just a little bit of a very difficult period, actually. And then 2023, we dealt with like the entire sideways market. 2020, I also dealt with the flash crash, saw 50% of my wealth like evaporate overnight in crypto. And then 2024, I dealt with like a different kind of pain of seeing crazy paper profits and crazy highs that I wasn't able to realize, and then the number coming back down to baseline. So I feel like over the past 7 years, I've kind of experienced it all: losses, multiple wipeouts, a near wipeout, and also the mental like difficulty of reaching like a big goal of mine and then round tripping. So I've kind of learned a lot of things over the last 7 years in the market. One thing that you do learn is that you need to prioritize survival. And I think the reason I've been able to stay in the game is because I've always kept enough to keep going, and I've solidified myself with enough to keep going, and enough of a defensive mindset, always having rules on how much Bitcoin I hold relative to alts, always having rules on how many stables I'll hold relative to alts. Like if you've been following the channel since the beginning of 2025, you guys know that I've been like 40 to 50% stables throughout that entire period. I stabled a little bit late. I believe it was March 2025 where I ramped up to 50%. I should have and could have done it in December and January, but I was a little bit late, but better late than never. Even still, with the large stablecoin weightings, I've dealt with new variables, for example, gold outperforming, US dollar underperforming, opportunity cost with equities. It's been really hard to navigate, even for someone that's been in the market for a while. I mean, it's been even more difficult, or just as difficult for, big fund managers, portfolio managers, and whales that have been in the game for much longer than me. They've also found it really difficult to position during these times. But there's one thing I keep coming back to, and that's prioritizing survival, because even if you make less money in the short term, you'll, as a byproduct of surviving, you'll stay in the game for longer, which is a much stronger predictor of long-term success. If you stay in a game, if you stay in a market like crypto, we know that long-term there's going to be great times in the market. I really believe we're going to see great things from Bitcoin over the next 5 to 10 years, but you need to stay in the game to actually see that and experience that. If you wipe yourself out in the short term, you're not even giving yourself a chance to keep playing. So you're just trying to, buy yourself more tickets to keep playing. And the way to do that is to prioritize survival over anything else. Number 2, I've got 3 points here. And this is really important. Try and forget your portfolio all-time high number. Now, this is hard, even for me. Like, I keep anchoring to this number from 2024, but it actually does you no good. It does you no good, because the reality is all you can control is your portfolio now. What is the best possible allocation for your portfolio now? Making sure your portfolio now matches your long-term goals. So, your ideal allocation to crypto overall is ideal based on your risk management. So if you're more risk off, this could be 5 to 10%. If you're more risk on, 25%. If you're even more risk on, you could be 50% plus in crypto. It doesn't actually matter what the number is. It's about whether it aligns with your goals. Now, a good mental framework that I use, because I think a lot of people talk about percentages, like, oh, you should be 10% Bitcoin, you should be 10% equities, you should be this, that. I kind of find that irrelevant, because everyone's at a different level. You could have $500, you could have $1,000, you could have 10,000, you could have $1 million, you could have 10 million, you could have 100 million. I don't know who's watching my videos. I know there are some whales out there. Everyone's different based on their own position. So I could say, oh, I'm 10% Bitcoin or 20% Bitcoin, but it won't actually be relevant to you. So the way that I would think about it is in terms of time. So how quickly would it take you to make back your portfolio? That is a good way to think about risk, especially in alts. Typically, I will not want my altcoin portfolio to be bigger than my 6-month runway, because then I know, worst case, in 6 months through my income, I can replenish the size of my altcoin portfolio. So if you're going to take on a lot of risk in the market, like let's say you're making $5,000 a month and your portfolio is $20,000. Well, you can take on a lot of risk with that $20,000 portfolio, because, worst case, if you blow it all, you can make the money back in 4 months. Whereas if you had a $200,000 portfolio and you were making $5,000 a month, now, you can't take on the same amount of risk because your replenishment rate in terms of time is so long. So I urge you, do some numbers. You can use ChatGPT, you can use Claude, you can use a spreadsheet, whatever you want to do. Do some numbers based on your income, your portfolio, and reverse engineer that to manage risk, because I find that's a much better mental framework. Thinking of money in terms of time, because money is just paper. It's so irrelevant when you just see it on a screen. But if you think in terms of time, that's something so tangible and so personal to us. It really helps me with my positioning. It actually stops me from over positioning now a lot and helps me do step 1, which is prioritizing survival. When I'm cognizant of, I probably shouldn't risk this much because it would actually take me 2 months to make this, and that is a lot of time. So if I lose this on the trade, or if that's the size of my stop loss, then that's probably too big of a stopgap. And you've just got to make sure you forget about this all-time high number and focus on the best possible job that you can do of allocating your portfolio now, because holding an altcoin or holding a position that's underwater because it might come back or you think it will come back, that's not a good framework. That's kind of falling for, sunk cost fallacy of I've lost this much, so I may as well double down, or I may as well keep holding. It's it's not the right way to think about markets. Your portfolio resets every single day. I always use that. I've said it on the show many times, but I use this theory of if you don't know whether to hold an altcoin position or not, ask yourself, if it was magically liquidated into stablecoins overnight, would you buy the tokens back the next morning? Would you buy all of them back? So if you hold $1,000 of Solana and then you wake up and you've got $1,000 of USDT, the exchange is somehow magically liquidated it, would the first thing you do be rushing to buy back that Solana, or would you buy back half, or would you buy back none? That is actually the better mental framing. Almost pretend, obviously there are tax considerations, but I think I can assume most of you are at a net loss, or at least aren't in, huge net gains, unless you're still holding entries from 2022, 2023. So I think unless like tax is a big concern, then this is like, actually it can work the other way. Maybe you'll even get tax loss harvesting from this. So that is a very good mental reframing. And whenever I do that, I realize that I shouldn't be holding something, honestly. Oftentimes when I'm trying to convince myself to hold something, I shouldn't really be holding it. And then when I mentally reframe it with that magic liquidation theory, then, oftentimes I think, well, I wouldn't buy a single token back. Well, then I should just sell it all. If I wouldn't buy it back, I don't have conviction, so I should sell it all. That's one test. The other thing you got to do is make sure, and you can do this now, potentially we're seeing a bit of a bounce right now. It's never a bad time to do this, by the way, but if it makes you feel better, that can help. You should be consolidating into quality assets only. So I really feel like this isn't the time to hold subpar assets. Now, of course, you have to define what quality is. Quality, in my mind, are revenue-generating assets with strong product market fit and survivability due to their business model, mindshare, and tokenomics that have the propensity to survive, and their business models still operate during bad periods. So I'll use a few examples. Hyperliquid, I would consider this a quality asset because it's revenue generating. It still makes money no matter the market conditions. And when the market comes back, whenever that is, it's still probably going to be relevant because it has product market fit and it has a moat. I would say like BNB, MNT are in the same category because they're the tokens affiliated with Bybit and Binance, the two biggest crypto exchanges. These are business models which are proven, and they clearly have a vested interest to support these tokens. You can also extend this logic to a project like Pump Fund because, it is key in crypto infrastructure despite it containing a bit more risk than the other assets that I just mentioned. You could potentially extend this logic to ENA in bullish conditions, but obviously in bearish conditions, it's really reflexive to the downside, so you might want to wait and get back in on momentum. But we could go through every token in the market, like ZEC, I think it is in the quality basket. Solana, I think, is in the quality basket. So, and there are reasons for this because they're established assets and they have PMF, but you really have to determine whether or not it's quality or not. And I actually think now it's easier than ever because now the fluff of prices are like out of the market, and a lot of the juiced up market caps are out of the market. You can actually see, are the teams still shipping, or have they just gone into complete maintenance mode using agents to run their X accounts? Are they still on AMAs? Is the founder still going out there? Are they still active? Are they still built? Like, it's actually easier now than ever to see something whether it's legit or not. It shouldn't take much thought. Look through the data, look through, do a grok prompt. Perplexity is actually really good for this, the AI tool as well. Go through Tokenomists, look at the unlocks, go through DeFi Llama, look at the revenue, and assess whether something's quality or not. If you're unsure, it probably means it's not quality because it's pretty obvious right now to me what the quality assets are. Now, there are some non-quality or more speculative assets that I still hold, but I'm really willing for those to go to zero. And I think that's the mindset you have to take. Once again, you have to almost think, look, if I lost those tokens, how many months would it take me to make it back? And that helps me assess risk. Like if it's 2 months worth of income, then that helps me assess risk because it's like, well, I can afford these to go to zero, so I'll take the risk. But those are only for things that I have an inkling will come back, or I'm just DCAing into because I think they might find product market fit in the future. But in a space like crypto, which is already speculative, if you're speculating on the fact that they might find product market fit in the future, it's not an asset that you can really bank on. That's more, these are more moon bags that you can hold in the event that the market comes back. But the majority, like 80-90% of your portfolio, it should only be in quality. And then of that 80-90%, Bitcoin, Ethereum should probably make up at least half of that, right? Especially Bitcoin right now. I've made even more of an effort to consolidate alts into Bitcoin because if this market is going to recover, then Bitcoin is going to lead. And I'm also going to get less downside, and there's also a guarantee in my mind that Bitcoin will come back. Whereas there's no guarantee that the altcoins that were hot during the last pump will be hot during the next run. And you'll always have time to reposition as the market shows strength. So even if you're like, oh, but I'm going to miss alt season. It's like, yeah, but in alt season, how many opportunities are there to make money? How many new launch opportunities are there to make money? Like, it's not hard to make money. You can long anything in alt season. So it's better to not preempt that too much. Just hold a basket of quality assets, Bitcoin, and then save the rest for trading. And I'm still sitting around. I actually looked this morning, 53.1% stable is ridiculously high. Partly because I've been consolidating assets, partly because I obviously the asset values have gone down, so it's automatically kind of reweighted towards stables. I am In terms of my own plan, going to be reallocating a bit more to Bitcoin. I want to see some strength or a bigger dip, but I mean, I'm already quite a big holder of Bitcoin. I don't feel like I'm underweight, but I am open to adding some more. I've been allocating more to gold just to diversify my portfolio out a little bit. I actually missed the silver wick this morning, but I think there'll be more chances here. I don't think this is just going to like run straight back to highs. I do like copper. I am using this as a chance to add a bit more copper because, I posted my thesis in the Discord and I spoke about it a little bit on the show as to why I like copper as well. So these are some of the plays that I'm making, as well as doing exactly what point 3 is. I'm doing a bit of consolidating, going through getting rid of some dust in my portfolio, making some strategic rebalances, and asking myself some tough questions. Because even I've been speaking about these principles for like the last year and a half on the channel, but even I sometimes fall into this trap of holding things that I'm not 100% sure on, or if I'm holding them, maybe I'm overexposed. So I might do that question in my head of like, okay, I'm holding $10,000 of this token. Am I, if it was liquidated overnight, would I buy back the token? I might say, yeah, I'd buy back 2,500, but not the full 10K. Well, that's a sign that I need to size down 75%. So it's never about time to consolidate. Just because the market's down, don't be afraid of it. Go through your portfolio. It's better that you make the tough decisions now. So if things do get worse, you're protected. And then if things improve, you actually get better upside anyway, because the quality assets are going to rebound quicker first. So it's actually, and they've got a higher likelihood of coming back. So it's actually a win-win. I'll do Noti Gang selections tomorrow. So comment again. We'll combine the last 2 videos. And hope you enjoyed this video going through a bit of portfolio theory and my overall thoughts on the market. See you in the next one. Have a lovely rest of your day as usual. Peace out.